What's going on? Welcome back to the channel. We have another big week for earnings. I want to go over some of the key stocks that you need to really watch for, the implied move, where things might be going, everything that you need to know. But first, make sure to hit that thumbs up. And with that, let's get right to it. So there's quite a lot of stocks I'm going to be talking on in this video. So if there's some specifics that you're looking for, just kind of check the bottom. I'm going to be kind of doing the chapters, so you can just forward to, for instance, Robinhood, SMCI, whatever floats your boat. I'm not going to go over all of them, but a lot of the key ones I feel are worth looking at. So without further ado, let's get right to it. So starting off with Shopify. So sitting at $117 and change over the last 1 year, it is up 37.85%. Looking at their earnings, so it is on the 11th before the market does open. 43 cents for the earnings per share, 2.73 billion for revenue. Over the last 90 days, you've seen 30 positive and 2 negative revisions to the earnings per share. And ultimately, looking at the specifics, that earnings per share does work out to be 27.11%. Year-over-year growth. So pretty good stuff. 29 cents the low, 54 cents the high, based on 34 analysts. And then moving over to the revenue, 2.73 billion for the revenue, 27.31% year-over-year growth, 2.6 billion for the low, 2.8 the high, based on 41 analysts. Quickly going over here, so the implied move is 11.55%, and that works out to be roughly around a $14 move in either direction. So anticipate a lot of volatility. Last couple earnings, they hit a home run. So there's a lot of columns here. So the 1 day move after the earnings, 3 days, 1 week, and then 2 weeks. So ultimately, 1 day after their last 2 earnings went up 21%, 17%. But just to play devil's advocate, their Q4 earnings, historically, they always do miss. So they missed on 2024, 2023, as well as 2022. So again, you can kind of maybe read between the lines. There's a lot of high expectations for their earnings. So that could once again cause some volatility. These videos are not to get you to buy, to sell, to do anything. It's just to kind of analyze the information, and ultimately you do whatever floats your boat. But I think the consensus is that this is going to be another home run earnings, but historically, just that does result in higher expectations. And what we found from last week is the market is cutthroat. Honestly, you can hit the marks on your earnings per share revenue, but if you fail to give future guidance, your stock is going to get slaughtered. So that could extend to this stock as well as many of the other ones I'm going to be talking on. So once again, that's something to kind of consider. So historically speaking, it could go up. There's a lot of other good information right over here if you're into options strategies. So 1 day long straddle, 1 day short straddle, 1 week, and then 1 week short. So historically, what I obviously bring up by this, let's say even here, so went up 22.36% after the 1 day. The 1 day long straddle went up 114. So very profitable in many aspects. So definitely take the time to research, do your options, and whatever floats your boat. If you are looking for my specific targets on a lot of these stocks, pop over to my Patreon. I posted them just a second ago about where I see, for instance, this stock going and many of the other ones. So with that said, let's get right to the second stock. That is SMCI. So this one's going to be definitely one that a lot of people are watching. At this stage in the game, I think if you're doing any options or hedging with this, it is kind of a lotto play. It's definitely a very big lotto play. Over the last 1 year, it is down 46.93%. Expectations for their earnings, so it is coming out 11th after hours, 75 cents for the earnings per share, 5.94 billion for the revenue, and no revisions over the last 90 days, both positive or negative. So analysts, honestly, are just staying quiet and waiting. So again, even they aren't kind of doing all that much over the last little bit. So the earnings per share, 75 cents is that estimate. That does work out to be 119.64% year-over-year growth. 75 cents the low, 75 or 76 the high, based on 7 analysts. And then moving over to revenue, 5.94 billion works out to be 180.43% year-over-year growth. 5.9 for the low, 5.95 the high. So of the 8+ analysts that gave ratings, they're very, very narrow-minded. So you could see a huge amount of volatility if it is just slightly outside the parameters of what is stated. So again, it's going to come down to that plus future guidance, like I already mentioned. But the implied move right now is 17.03%. Last couple of earnings, they did miss. So they went down. One day after the earnings, down 18%. So I'm looking at this column right here. So 18%. And then the following one, down 20%. Leading into the earnings, so 2 weeks, it's gone down 12.88%. So a little bit of consolidation. I think that has to do with maybe earnings fears and just broader fears at the same time. So that 17%, it does work out to be roughly a 6% move in either direction. So like I said, you could make some very, very serious money with this. But I don't think there's any guarantee on either direction. It is essentially a very big lotto play. Options is signaling kind of a low end of $30 and a high end of roughly around $45. So again, something just to kind of keep in mind. Moving on to Upstart. So they're sitting at $68.85 over the last 1 year, up 112.37%. Earnings, similar to SMCI, is on the 11th after hours, -4 cents for the earnings per share, 182 million for the revenue. Earnings per share revisions over the last 90 days, 6 positive, 7 negative revisions. And then just to give you a quick further overview, so that -4 cents works out to be 64.41% year-over-year growth based on 13 analysts, -7 cents and a high of 3. So polar opposites. So you'll definitely see some craziness if it is positive on a side note, but that 182 mil is 29.71% year-over-year growth, 180 the low, 190 the high, based on 12 analysts. As far as this is absolutely insane because the implied move is 18.15%. Last couple earnings, though, they hit it out of the park. So 1 day after the earnings, they went up 46%, following one, 39.71. So again, that's something to possibly consider. There isn't really anything. It looks like they kind of beat 50% of the time, definitely having a lot of good momentum recently. So that 18% does work out to be $12 in either direction for the most part. So this one is going to be a crazy, crazy ride. And the interesting thing is, they've been going up because they've been giving constant good future guidance, even though they've been kind of missing on the marks for the earnings per share, for instance. So I think all in all, this stock definitely is one to kind of look at. A lot of the other fintechs that have been coming out all have been really hitting home run earnings, up 20-something%. So I believe it was Affirm just had their earnings Thursday, if I remember correctly. So once again, this one definitely could be one to add to your bullish side of I guess things or trades that you're going to be doing for this week. Moving on, DoorDash. So DoorDash sitting at 195 over the last 1 year, up 71.03%. Moving over here, so similar to the last couple, it is on the 11th after hours, 94 cents for the earnings per share, 2.85 billion for the revenue. Over the last 90 days, 6 positive and 1 negative revisions to the earnings per share. That 94 cents works out to be 124% year-over-year growth based on eight analysts. And then this is what I kind of found weird. So this 2.85 billion does work out to be 23.65% year-over-year growth, but this is 34 analysts. I don't know why there's 8 analysts only giving earnings per share estimates, 34 for the revenue. So something doesn't really jive for that. Obviously, some analysts can definitely do that, but I think that's abnormal for them to completely omit and not really look at earnings per share and only focus on revenue. But then again, what do I know, right? Aside from all of that stuff, though, 8.55% is that implied move. Last couple of earnings, they definitely did hit it out of the park. And so it did go up roughly 13% 2 weeks after, and then 20%. And historically, it looks no real crazy correlation. They kind of missed on the last 2 Q4s, but I don't think that's a little bit far-fetched to kind of look, trying to analyze all of that. Historically, it's around a 50-50 or 40-60 likelihood of them actually hitting. Again, that's kind of looking back at 2023, 2022. Back then, this stock definitely was struggling a lot more than what it has. I think it's built up a lot of good momentum. That 8.55% does work out to be $16.72 in either direction. So if you're doing options, something to again consider. Aside from that, definitely I'm not really a fan of DoorDash whatsoever, so I'm kind of impartial whether it goes up, down, sideways, or anything. Another one that I'm kind of impartial with is Lyft. So they do have their earnings coming up. So sitting at $14.17 over the last 1 year, it is up 13.82%. Similar to the last couple, it is on the 11th after hours, 22 cents for the earnings per share, 1.54 billion for the revenue over the last 90 days, 8 positive, 3 negative revisions for the earnings per share. And then roughly that 22 cents works out to be 38.57% year-over-year growth based on 13 analysts. And then that 1.54 billion is working out to be 25.9%. And that's from 35 analysts. So I know I'm only bringing up kind of the short term what's happening for this earnings, but the reason why I don't really like this is because it's not really consistent. You have some quarters anticipated for it to be 8%, some 30, some 40. It is all over the place. Revenue seems to be good. This upcoming earnings seems to be an outlier. It looks like down from there. So that's usually not what the market does generally like, but again, what do I know? The implied move is 14.67%. And so that again could be in either direction. That works out to be roughly a $2 swing on either way. Last earnings, they did do fairly well, went up 22.85%. Historically, though, they do go down roughly around 60% of the time. They have been definitely building some good momentum, but I think we can kind of look at Uber and what happened to them recently, not really giving the best future guidance. So like I said already at the beginning, if companies give and somewhat shaky on future guidance, you're going to get like cut pretty fast. So once again, definitely something to kind of consider. This is what has happened in the past for options. So usually the straddle options, both long and short, haven't really worked favorably for this stock. So maybe it's maybe one to kind of omit. Reddit. So this one, it'll be an interesting one. Definitely building some pretty good momentum, sitting at 225. Over the last 6 months, it is up a very impressive 344.33%. But earnings is on the 12th after hours, 70 cents for the earnings per share, 405.06 million for revenue, 6 positive, 4 negative revisions to the earnings per share, and ultimately that 25 cents, because they obviously just kind of launched recently, it's not anything year over year. 15 cents a low, 33 the high, based on 16 analysts, and then that 405 million, low end of 394, high end of 419, based on 19 analysts. So this earnings will be key and most likely will cause a domino effect across many of the other quarters' expectations. So this one will be absolutely key to give good future guidance on. Not really much information to kind of analyze. 13.94% is that implied move. That does work out to be a $31 move in either direction. So once again, if you're doing options, could be kind of profitable, because even looking here, if you did a 1 day long straddle, it moved up 41% after the earnings. So last earnings was definitely good, but the 1 day long straddle went up 145.76%. So even more reason to kind of look at some options. I think this stock, the market might kind of overlook the key metrics and just focus solely on the future guidance, but that's just me. Moving on, so ticker APP sitting at $375 over the last 1 year, up a very impressive 687%. Earnings, so that is coming out the 12th after hours, $1.79 for the earnings per share, and then 1.26 billion for the revenue. Side note, in some cases though, if a stock is really moving higher, similar to what happened with Palantir early on stages, like when it was like $30, people and analysts really looked at this. So the forward PE, and then as soon as they had their earnings, even if they gave good future guidance, hit the key metrics, they still went down because analysts started to say, hey, the forward PE shouldn't be at 92.3. It's way overvalued for what they offer, very limited growth. And I think that prompted a pullback. So again, that might potentially happen in this case, but 1.26 billion for the revenue over the last 90 days, 7 positive, 1 negative revisions to the earnings per share. And ultimately that $1.26, 156.72% year-over-year growth, $1.16 the low, $1.40 the high. And then revenue, 32.58% year-over-year growth, 124 the low, and then 131 the high. Moving over to this, you can kind of see a very good chart on the earnings per share. So they definitely have been having some good momentum. Historically, it looks like they beat around 80% of the time. So of all the stocks, this one might be one to kind of remain bullish on. Even one day after their earnings, so went up 46.27%, the 1 day long straddle went up 258%. So this one might be one to look at doing an option strategy on. Just my 2 cents. Again, you do whatever floats your boat. But yeah, definitely this one is interesting, and I wouldn't probably want to bet against it. But then again, what do I know, right? That does equate to that 16% move is around a $61 move in either direction. So something to kind of consider. Robinhood. So this one will be a interesting one. And most likely, I feel like a lot of people will be looking at the forward PE as well, post earnings, regardless of the results. But over the last 1 year, it is at 407.82%. Definitely very good stuff. I think a lot of that hype has to do with a lot of their innovation that they've been doing. Earnings is coming out on the 12th after hours, 52 cents for their earnings per share, 951.79 million for the revenue. Very big improvement from the last expectations, but over the last 90 days, 10 positive and 0 negative revisions to the earnings per share. And then just to give you a quick overview, so 1,359% year-over-year growth for the earnings per share. 29 the low, 53 the high, 11 analysts. And then moving over to this, so 102.08% year-over-year growth. Potentially a high end of 1.01 billion. If they hit that 1 billion mark, that would be huge for the company, very iconic. And so that's based on 10 analysts. Giving you a quick overview of this though, implied move 10.62%. And so that does work out to be roughly a $6 swing in either direction. Aside from that, historically, they kind of beat roughly around 50% of the time. But recently, though, they've been gaining some very good traction. So something, again, to kind of consider. And even if they do, let's say, miss on their earnings, sometimes there's a buying opportunity that kind of happens after like 1 week. So again, you're going to have a lot of volatility with this stock, and you can make a lot of money through options. Moving on from here though, Datadog. So sitting at $142 over the last 1 year, it is up 9.21%. For this, it is the 13th after hours, 43 cents for the earnings per share, 713.85 million for the revenue. Over the last 90 days, 8 positive, 3 negative revisions to the earnings per share. This is some of the current expectations. So the earnings per share, that 43 cents, does represent a negative 1.74% year-over-year growth. 41 cents the low, 49 the high, based on 34 analysts. That revenue works out to be 21.06% year-over-year growth. And it seems to be a solid 20% plus for the foreseeable future. That's what's anticipated. But that implied move right now, it looks like is 8.74%. Historically, they do miss on their earnings per share, as you can kind of see right there. But that 8.74% does work out to be $12 in either direction. So something to kind of consider. They have been gaining some pretty good momentum over the last couple earnings. Nothing significant. So I think on the low end, they kind of at the bare minimum go up 10%. Downside, they go roughly down 10%. So it is going to be a very volatile earnings. And yeah, I think based on the volatility, you should definitely look at one of these option strategies. Historically, the 1 week short straddle seems to be very advantageous. So again, something to kind of consider. But like I already mentioned, like 6 times or 10 times already, it'll come down to future guidance. And a lot of tech stocks, they have been somewhat cautious on their future guidance, so that's why they've been getting slaughtered. Coinbase. So this one's going to be an interesting one. So sitting at 274 over the last 1 year, up 124.86%. And then their earnings is on the 13th after hours, $1.70 the earnings per share, 1.75 billion for the revenue over the last 90 days, 12 positive, 0 negative revisions to the earnings per share. And that earnings per share works out to be 63.56% year-over-year growth. And it seems to be an outlier. I don't know why it drops to 130, the next one down 70%, but beside the point, 83.8% year-over-year growth, and that's for the revenue. 1.1 the low, 2.4 the high. So you have polar opposites, so anything could really happen with that. So anticipate a lot of volatility. And right now, 8.69% is that implied move. Over the last couple earnings, they have regrettably missed on their earnings just for face value and plus the future guidance, but they kind of recover at the 1 week mark in some cases, but historically they do generally miss. When they beat, they're not playing around. It's not just 5%. They go up on bare minimum 15% to almost 35%. So when they hit it, they hit it. When they miss, they miss. They go down 15%. So anticipate a lot of volatility. I'm not really sure why the implied move is so small on all these when the actual price, what does move, is like double digits every single time. So that works out to be a $24 move in either direction. So again, something to keep in mind. So let me know on a side note if there's any of these stocks that you're playing, if you own the actual stock, trading options, or whatever else. Moving on, Twilio, ticker TWLO, sitting at 145 over the last 1 year, up 108.94%. Earnings is coming out after hours on the 13th, $1.03 for the earnings per share, 1.18 billion for the revenue. Earnings per share revisions over the last 90 days, 15 positive, 1 negative, and ultimately kind of see that earnings per share works out to be 20% year-over-year growth. So pretty good. 97 cents for the low, $1.12 the high, and then revenue 9.87% for that year-over-year growth. So you're seeing still single digit. I don't know how the market's going to really take that into consideration. Because like I said, I think this is going to come into play. The forward PE for this stock currently sitting at 39.49 for that, but implied move as of right now is 8.25%. Works out to be like a $12 move in either direction. So this is ultimately the most volatile you can anticipate ever since basically like 2022, when it was at like $202. So last couple of earnings though, they did go up 14% and 11% after the 1 day move. And so yeah, anything is possible. Historically, it's about like a 50-50 chance of them kind of beating. They have been really notorious on missing on the earnings per share. So something again to kind of consider. And based on that lackluster revenue expectations, it is fair that they might give somewhat lackluster future guidance. So once again, maybe this stock potentially could have a pullback, but like I said, what do I know? DraftKings, ticker DKNG, sitting at $42 and change. Over the last 1 year, it is down slightly, 0.75%. For the earnings, it is after hours on the 13th. 4 cents for the earnings per share, 1.4 billion for the revenue. Over the last 90 days, 0 positive and 20 negative revisions to the earnings per share. Looking at this, you're having negative 68.02% year-over-year growth, and low end of negative 27 cents, high end of 1 cent. So polar opposites. So if it ever comes in anywhere remotely close to that high, then you'd have a skyrocket of a stock. But aside from that, that revenue does work out to be 13.86% year-over-year growth. So a lot of kind of volatility for that. 8.25% for that implied move worked out to be $3.50, kind of in either direction. Historically, it's about 55% likelihood of them hitting. As you can kind of see, their last earnings have been nothing really crazy to cause any crazy moves. So this one, maybe you might want to not really look at doing any option strategies, because historically it doesn't really result in all that much. but when they miss, it's kind of down on average around 7%. When they hit, they seem to not mean business. They go up roughly about 10%. So it is going to be a fun time. No real correlation for the recent trend or anything like that. So this is, it is what it is. So I know this one was definitely very popular back in the day, and I kind of regret selling it. I did buy it, I think, what was it, at like $20, but you win some, you lose some. But aside from that, last but not least, last stock I'm going to be covering, and that is Applied Materials, ticker AMAT, sitting at $180. Over the last 1 year, it is up 5.32%. And then looking at this, so 13th after hours, although it does show estimated, as far as I know, it is actually stated there. So something maybe Seeking Alpha isn't 100% accurate for that, but $2.30 for the earnings per share, 7.16 billion for the revenue. Over the last 90 days, 15 positive, 10 negative revisions to the earnings per share. And then over and above that though, that earnings per share does work out to be 7.8% year-over-year growth, 219 the low, 247 the high, based on 28 analysts. And then over and above that, the revenue 6.77% year-over-year. So you are seeing kind of mid single digits. So nothing really crazy about this stock. Low end 6.95 billion, high end of 7.58. So this stock definitely makes a ton of money. But I think opportunity cost will definitely come into consideration, and maybe the again, given this, they might give somewhat lackluster future guidance, but that's based on 25 analysts. On a side note, implied move is 5.94%. So looking back here, the only time it's been more volatile is the Q1 earnings in 2022. But over the last couple earnings, they have definitely missed. So not all that great, regrettably. And I think about 50% of the time from this column right here, they do miss on their earnings. And yeah, ultimately that 5.94% does work out to be almost 11% swing in either direction. But on a positive note, they do generally beat on their earnings per share. So they are on a pretty good trend for that. And if you're looking at doing options, it looks as though the 1 week short straddle seems to be almost a guaranteed winner. So if you're looking at doing options, that one might be one to consider. So these are all the stocks that I am covering for right now. If you do want further follow-up, let me know in the comments below, and I can kind of look at maybe doing some more. But I think those are kind of the hot ones that most of the broader market will be paying attention to. So let me know your thoughts. Don't forget to hit that thumbs up and subscribe. Like I mentioned in the video though, if you're looking for buy signals on stocks, options, and crypto, or even just targets on many of these companies post earnings, pop over to my Patreon and get buy signals on all of them. So definitely worthwhile to pop over there and take a look. With all that, appreciate all of you watching.